Greeting everyone, I am Chang Chien Nee. Today, Group 2 is going to do a presentation on Topic 10, Audit on Purchase Cycle. We will discuss about 7 agenda as shown below. To get a better understanding on this topic, first, I will talk about what is purchase cycle. Well, purchase cycle, or is another name, procurement cycle. The step taken to order and pay for the product or services required by the business. For companies of all sizes, from local small business to global megacorps, the purchasing cycle consists of a series of purchase transactions starting from requisition of goods or services and end with the recording of bill and payment of account payable. In between, they have to generate purchase order followed by receiving goods or services from the supplier.
Good day everyone, I am Chong Wen Hui. Now I would like to introduce about the audit objective of the purchase cycle. The audit objective of the purchase cycles are to evaluate the fairness, presentations and sufficiencies of all the evidence for all related transactions and the relevant purchases and payables account. And here is the 2 key issues to ensure that all purchases are recorded and not understated, and all payable from credit purchases is recorded. And here is the 3 general audit objectives. They are transaction objective, balance objective, presentations and disclosure objective. For the transaction objective, occurrence, completeness, accuracy, cut-off, classification will be established. Whereas for the balance objective, assistance, right and obligations, completeness, variations and allocations will be established by the company too. For the 3rd general objective, presentations and disclosure objective, the occurrence, right and obligations, completeness, classifications and understandability, accuracy, variation will be set up too.
In purchase cycle, information will flow through numerous accounts. Here, we will focus on 4 main accounts. First, purchase account. It is a nominal account used in recording the purchase of inventory from the suppliers. It can be said that the risk and reward related to the asset will transfer to the buyers once the purchase occurs. However, purchase account is used in periodic inventory system only. Next, cash payment. Cash payment account is to record the payment in terms of cash to the supplier regarding the purchase made. This indicates a decrease in asset since cash outflow to the supplier.
The account payable is a general account which represents the short-term obligations of the company, and it will only exist when the credit purchase happens. While for the purchase return and discounts, both of them are only exist in periodic inventory system and are contra account to the purchase account, which means they will reduce the value of purchase account. The purchase return will only exist when the return of inventory happens, whereas for the purchase discount, it is an offer offered by the seller to encourage the buyer to make the payment at a certain period.
There are 5 main functions in the purchase cycle, starting from receiving purchase requisition, preparing purchase order, receiving and storing the goods received, approving a supplier invoice, and last is recording the purchase and liability. It is important to place control in each function, but how? For the first function mentioned just now, receiving purchase requisition. Why is that? When an employee needs to make a purchase on behalf of their company, he or she has to fill out an internal formal document which called as purchase requisition form to inform the purchase department manager or officers about their request so that the purchasing department can start the purchasing process. It is the first transaction trial of documentary evidence. Let's look at the right side. These are the common sample of purchase requisition. Inside the form, it describes the goods, item costs, quantity order, prices, and the supplier. To ensure the occurrence of the purchase transactions, the validity of the request needs to be checked so that there is no fictitious transaction created. To meet this audit objective, a pre-number purchase requisition form needed to make sure the goods requested are appropriately ordered and received. The next function is preparing purchase order. After purchase request being approved, an official confirmation document, which is purchase order, will be issued from company, as the buyer to a supplier correspond to the product or services to be ordered. To prevent the illegal requisition of goods for personal use, the process of preparing purchase order is assigned to an independent department from the warehouse. The two audit objectives at here are occurrence and completeness. Purchase order is used as audit evidence on the occurrence of purchase transaction. Alike with purchase requisition form, the purchase order should be pre-numbered and properly authorized by the purchasing manager. To hit the two audit objectives of completeness, an auditor control of independent review shall be conducted by purchasing official to determine the goods ordered are exactly received and recorded. Now we move to the third function, which is receiving and storing goods for inventory. In this phase, the approved purchase order will be sent to the warehouse, a place where to receive the inventory from the supplier. After the storekeeper receives the inventory, a pre-numbered good receipt note, or we call it as GRN, will be prepared by the storekeeper to mark out the amount and condition of the inventory received. The GRN is then sent to the account department and serves as an evidence to support the occurrence of the purchase transaction. If you are the supplier, GRN is a document to prove the completion of inventory delivered by your staff to the buyer. To achieve the audit objective of completeness in purchase transaction record, the accounting personnel from accounting department will perform an independent check on the sequence number of pre-number GRN to prevent the fraud or error such as repeating recording or unauthorized usage.
Now we deal approving supplier invoice. The supplier invoice is a sale invoice and bill sent by the seller to the buyer, and this invoice will be sent to the accounting department after the storekeeper receives the goods. And this is some example of the supplier invoice. Some control activities are needed to help the company achieve audit objective. To achieve completeness, the company should record all the supplier invoice received with a serial numbers. Whereas for the occurrence, the second audit objective, the entity will relate the supplier invoice to a valid purchase transactions by checking the invoice and match with the GRN and purchase orders. For the accuracy, the company will ensure that the amount stated in the supplier invoice is accurate and agreed by the buyers and the sellers. Moreover, for the accuracy classifications, the company will provide a code to every supplier invoice to ensure that the invoice is recorded correctly to appropriate accounts. The second last control activity is the company will ensure that all invoices are being approved and recorded before the payment paid, and this control activity is needed to achieve occurrence. While the last control activity is the company will prepare a pre-list of supplier approved for payments to make sure that there is no delay payment or unpaid invoice. And this activity is held in meeting occurrence, completeness, and accuracies. Okay, now go for recording the purchases and liability. The control is also important in these sections to ensure that all transaction is recorded to meet the completeness and no unrecorded liability to fulfill occurrence, and the value recorded is correctly to meet accuracies and is in a proper period to achieve cut-off. However, this process is different between every company, as every company having a different company natures, and normally a computerized system will be used to perform purchase requisitions, purchase order, and the stock availability check. Payment transaction. This process involves to pay the payments for the liability and record for the payment paid, and the record will be always updated to avoid the overstate of account payables. To meet the audit objective, a few control activities should be established. The first control activity to reach occurrence is the entity should make sure that there is a segregation of duty between the check signer and the staff process the purchase transactions. Furthermore, the check signer will confirm that the payment document has a valid and approved supplier invoice and its supporting document, and the detailed status are correct and matched with the invoice before signing the checks, in order to fulfill occurrence and accuracies. Moreover, to achieve the occurrence, the following control activity should be conducted. The first control activity is the indications of payments will display on the supplier invoice after the payment mix, and this helps to avoid the repeated submission of payments. And besides, to prevent a thief or modifications, the check signer is responsible for the check's mailing and custodies. In addition, the check will issue in the name of the supplier and not payable to cash the checks, to prevent unauthorized people cashing the check. The last control activity to reach occurrence is the entity will ensure that only authorized people will access to the blank check and electronic signatures due to security purpose. And next, the entity will issue the pre-numbered checks to ensure that there is a complete records and no miss or incomplete checks in order to meet completeness.
Next, I will present on developing the audit plan. The practice of developing the audit plan for purchases and payables includes performing risk assessment procedure by obtaining an understanding of the entity and its internal control over purchases and payables. Based on the information obtained, the risk of material misstatement are assessed and further audit procedures are designed. There are 4 steps in the risk assessment procedure. The first step is understanding the entity to identify the inherent risk. Step 2, obtaining an understanding of internal controls over purchase and payables. Step 3, assessing risk of material misstatements. Step 4, designing a further audit procedures. So the first one, understanding the entity to identify inherent risks. Why is this step important? This is due to the understanding and identification of inherent risks helps to determine the potential misstatements in the financial reports. For information, inherent risk is the risk possessed by error or omission in a financial statement due to a factor other than a failure of controls. For the purchase and payables, an auditor should understand the nature of the entity business in the terms of 2 aspects, which are the types of products or services and the nature of expenses. For the types of products and services, for example, the cost of sales and gross margin can be determined to have understanding the products. Then the nature of expense, the level of purchases and payables that can be estimated throughout the payment period of the industry. Moreover, through the understanding of the nature business of the entity can help to assess inherent risks relating to exertion of purchases and payables. This is because there will be a number of potential inherent risks are derived from motivation of management to inaccurate reports expenses, which includes the first one, the pressure to achieve the targeted profits may lead the client to understate their expenses. The second one, the pressure to report a higher level of working capital may lead the client to understate their payables. And the third one, high volume of transaction that would affect all exertion. When there is a fraud risk identified, the auditor should make sure that the controls over purchase and payables are established and implemented adequately and effectively.
The design of audit plan should reflect its response to risk of fraud, such as performing further audit procedures to address the risk of fraud. So the second step is obtaining an understanding of internal controls over purchase and payables. The second risk assessment procedure is to obtain an understanding of the internal controls over the purchase and payables of the entity, where inherent risks that are related to purchases and payables can be reduced by establishing appropriate and effective internal controls. By preparing a written description or a flowchart, auditors can understand the controls over purchase and payables. In addition, auditors may complete internal control questionnaires for purchase and payables. After that, the auditors may determine whether the internal controls over the purchases and payables are implemented appropriately and effectively. For examples, the implementation of segregation of functions between invoice verification and approval and function of cash disbursement can be observed by the auditors. Observation or making enquiries from the management to seek further details can be done by the auditors too. Besides, auditors can also review the documents such as purchase documents to determine whether the sequence of pre-numbered documents are appropriately recorded or the monthly reconciliation between detailed records of accounts payable to the general ledger control account is performed to prevent any reconciled balances. So the third step is assessing risk of material misstatement. Based on the information obtained from an understanding of the entity, inherent risks and internal controls, the auditors assess the risk of material misstatements from both inherent and control risks. For example, the auditors may determine whether the purchases are vulnerable to risk of understatement due to the pressures to report high profits. Next, auditors should assess whether the controls over purchase cut-off of the entity are effective to ensure that the purchase and payables are recorded in its proper period. Once the risk of material misstatements are determined, the auditors should design further audit procedures appropriately. So the last step is designing further audit procedure. Lastly, auditors should design further audit procedure. They should determine the test to be performed based on the access risk level. There are two types of audit procedure, which is the test of controls and substantive procedure. Under the test of controls, there are tests of design effectiveness and tests of operating effectiveness. So, when did the test of control take place? It takes place when the internal controls are operating effectively and also when the substantive procedure alone does not provide sufficient and appropriate audit evidence at the exertion level. For the substantive procedure, in the event that the auditors believe that the control risk is high, a higher level of substantive procedure should be performed to obtain the required audit evidence. So the auditors should address any significant risk of misstatement by evaluating the design of related controls to determine whether they are implemented effectively. Auditors neither rely on evidence obtained in prior periods nor analytical procedures to address any significant risk of misstatements in the purchase and payables record.
Hello everyone, I'm Phoon Chin Pei. Today I would like to talk about further audit procedure. For the further audit procedure, it is split into two sections. For the first one is test of control, and another one is substantive procedure. So, today I would like to explain more about test of control. Tests of control are designed to obtain the sufficiency evidence to determine whether control over purchase and payable function effectively. The assessment of the test of control involves tests for design effectiveness. For example, requisition of goods and services, preparing purchase order, receiving and storing goods, approving and recording the supplier invoice, payment of cash purchase and payable, and recording the payment. Once auditor identify the presence or absence of the necessary control, then it needs to make some working like preliminary assessment of the control risk. Furthermore, auditor should perform tests for operating effectiveness. Auditor need to perform observations, performance, and document inspection, such as vouching and tracing. Tests for operating effectiveness are performed to obtain sufficiency evidence about its exception, such as the existence, accurate, completeness, accuracy, cut-off, and classification of purchase and payable transaction and balance. In addition, to test on control will be using computer assistant audit techniques to test the control over a computer information system. There are two categories of the control for a computer information system, such as general control and application control. For the general control will be applied on the whole aspect of the computer information system, and the auditor will evaluate the general control for the company. Meanwhile, for application control will be applied to processing, purchase, and payable transactions. When the test of control performed, the evidence obtained, and the conclusion should be documented in the audit working paper.
I'm Chee Mei Jee. I'm going to continue with the substances procedure. Substances procedure are an audit program based on the preliminary assessment of control risk. The nature, timing, or extent of the substances procedure is based on the result of test of control and the level of detection risk. If the detection risk is planned to be low, therefore, a higher level of substances procedure need to be carried out. However, the auditor is allowed to use professional judgment to determine how detailed the substances procedure are, after acquiring an understanding of the client company internal control. Normally, an auditor will perform more than a minimum level as they want to get sufficient and appropriate evidence. Since we are focusing on the purchase cycle in this chapter, substances procedure are designed to ensure that the type of procedure are effective to obtain appropriate evidence that the account purchase and payable are not understated. Effective substances procedure help to lessen the detection risk when the evidence obtained able to prove that the possibility of material misstatement remaining undetected in individual accession is low. For the disclosure, the auditor should know the requirement of account payable and borrowing or loan. This part will be discussed later. There are three types of substances procedures, which are analytical procedures, test of detail of transaction, and test of detail of balance. Prior to performing the further audit procedures, an auditor should perform initial procedures such as tracing the opening balance for the account for the current period that shown in the ledger provided by the client company to the audited balance of the previous year audit working paper. Later on, a listing for all account payable balance is obtained from the client, and a reconciliation to the ledger will be done and review them for any unusual entry. In addition, recalculation will be done by auditor by adding the total in listing and compare the total with the amount in the ledger. The amount must be tallied between the listing and the ledger to make sure that there is no unrecorded transaction. Next, it is the comparison of a sample of supplier details and balance between the listing and the subsidiary ledgers. Sampling method is used because it is impractical for an auditor to test all the transactions in the client's subsidiary ledger. Analytical procedures are planned to confirm the expectation in combination with other audit testing such as test of control and substantive test of details, which is performed in 4 stages. Stage 1 is to review the understanding of the entity as to whether any change to payable balance are to be expected. Stage 2 is to determine any fluctuation in the amount of purchase and payable balance between this year and the previous year. If there is significant fluctuation, auditor should delve deeper to know the reason. Stage 3 is to determine ratio and trend for gross profit and average payment periods. An unusual change in gross profit margin compared to previous year figures signify the possibility of misstatement in recording purchase. An increase in average payment periods means that the client is facing problem in collecting receivable or maybe other reasons that lead to it unable to pay regularly. Stage 4 is to analysis expense account by reviewing the ratio between each category
of purchase with the total sales and compare with the previous year ratio to determine the level of activity for the current year to ensure the completeness of the purchase record. Tests of transaction are done to check for the accuracy of the financial statement transaction. Tests of transaction are normally performed during the interim audit and in the form of dual-purpose tests. For example, the purchase cut-off test and the payment cut-off test. Document inspection is performed through vouching and tracing. Auditor watch record purchase transaction to supporting documents such as purchase order, group receipt note, and supplier invoice to verify the occurrence of the transaction, or in other words, to identify the transaction are valid. It starts with a number in the financial statement, and then auditor find the document to support the number while tracing looking at the financial document as mentioned before to purchase journal and account payables to verify completeness of the records. Purchase cut-off test is performed to ensure that the current year purchase and the payable are recorded in the current period. This test is performed by obtaining the number of the last group receipt note for the receipt of the years. Later on, select a sample of group receipt notes before the last number and match with the purchase order date to ensure that the purchase are recognized in the current year, and also check on the agreement with entry in purchase journal to ensure that they are recorded in the current year. After test of the current year, a sample of group receipt note after the first group receipt note for the subsequent year also need to test to ensure that it is recognized and recorded in the subsequent year. For payment cut-off test, it is designed to provide evidence that the payments are recorded in the appropriate period. A proper cut-off is important to ensure that the correct presentation of cash and liability in the financial statement. The third substantive procedure is test on detail of balance. It is concerning the obtaining of evidence for account payable. Debit or credit is not the main focus in this part, but the balance at the end of the period. It includes 3 tests. The first one is reviewing of monthly payable reconciliation. Auditor should examine any unreconciled balance after reviewing the reconciliation prepared by the client. Normally, the difference between the supplier statement and the client record are mostly due to goods and cash in transit and dispute amount. The selection of account for testing should be based on the volume of transaction and not the list of account payable provided by clients. The higher the volume of transaction, the bigger the sample will be tested. The second is through sending requests to supplier to confirm the outstanding balance. However, this procedure is less performed as supplier invoice and statement are available to substantiate the balance. It provides evidence to the existence, obligation and valuation of the account payable, but not the completeness. After that, the confirmation should be supplied to the auditor office. This confirmation letter will be filed by the auditor in the working paper for further refer purpose. The third test of the detail of balance is investigate for unrecorded liability. It is being investigated by examining the subsequent period purchase and payment transaction, which already explained in the purchase and payment cut-off test. The second is by performing analytical procedures on expense to determine any unusual reduction in expense, as it is signify the presence of unrecorded liability. For example, a 12-month rental expense only recorded for 11 months. Thus, there is an unrecorded liability for the last month of the period should be accrued. Examine any contractual agreement or commitment that raise the existence of liability not yet provided for in the account, such as progress payment on long-term contract, also one of the procedures used to investigate unrecorded liability. After all the tests done, auditor need to disclose in the report. Auditor should know the disclosure requirement on account payable and borrowing or loan. Thus, auditor should review the list of account payable and determine their category, whether the amount to or from related party or loan. A separate disclosure should be made. Auditor should also review if there is any debit balance in the payable list. If yes, the debit balance should be reclassified into the current asset. Lastly, review the minutes of meeting or any supporting document such as contract or agreement for any information on loan or payable.
Lastly, as we conclude that purchase and payable are the main purpose of purchase cycle, the auditor should understand the business function related to purchase and credit purchase. This is because it will help auditor to determine internal control over the purchase and payable account. In order to achieve the object, auditor should perform the test of control to determine the control risk and the amount of substantive tests. Then, test of review of transaction and balance will be performed in stage to obtain sufficient appropriation. Audit evidence that the account payable are fairly stated. Meanwhile, for searching the unrecorded liability is an important procedure to perform by auditor. Therefore, the procedure normally performs when auditor perform the cut-off test for the purchase and payment. So, that's all from our group presentation. Thanks to our group mate and thank you for lending me your ear. Bye bye!